hopes of an economic revival, balance sheet which is looking very repaired for most PSU banks, and at a time when earnings seem to be promising a bit of a recovery, can India's largest bank manage to see all of that at times when there are some glimpses of a continued slowdown? We put that question across and more on India's economic game plan to Mr. Rajnish Kumar, the Chairman at State Bank of India. Mr. Kumar, thanks so much for taking the time out and being with us today.
Pleasure.
On Bloomberg Quint. What's the sense that you get, Mr. Kumar, at a time when almost everybody was penciling in FY20 to be the year of growth, PSU banks, their balance sheets having been repaired, not just for you, I'm talking about the space at large, and earnings from corporate India coming up, there seems to be, maybe due to global factors or otherwise, a bit of a cloud in the horizon. Do you think it'll get repaired sooner rather than later, or is it difficult to say right now?
No, right now, a bit difficult, but there is a lot of work in progress. Even if we look at the budget, there are many announcements in Part A of the Honorable Finance Minister's speech that once they get executed, and hopefully they will get executed within this year, then it will give a boost to the demand. So first is that we need a demand boost in the country. As of now, the demand has slowed down, and that we are seeing in many sectors. And the sectors which are under focus would definitely be related to construction. Construction means I'm including whether it is infrastructure or whether it is affordable housing. That is the sector which has the capability of creating employment, and that is the sector which has capability of benefiting other related industries, because the forward and backward linkages for infrastructure and housing are very significant. And the last year, of course, we were taking pride in the fact that consumption credit or the growth is intact. But right now we are finding that there is a slowdown there in certain sectors, like auto is a good indicator. So it is important that the demand comes back in the system as quickly as possible. As far as the public sector banks are concerned, last year, because of the recapitalization which was done in a quite significant way, so many banks have been come out of PCA framework. Only now 5 public sector banks are within PCA framework. The announcement around the recapitalization, where again a very significant amount of 70,000 crore has been announced. And so the supply side constraint, which is coming because of the public sector banks' inability to lend for various reasons. So that roadblock also will get removed. So we need demand and we need capability to meet that demand.
By the way, since you touched the minutiae, and we'll come to the larger picture as well, but this 70,000 crores, just some clarification, because still a few quarters of the markets are unclear. It's staggered. One doesn't quite know how long is it staggered towards. So therefore, if it's 70,000 over 2 years or 3 years, then it's not as impressive in a sum, right?
But
or
I
you would
don't
reckon
think that is not the thing. In budget, I don't think there is a convention that you announce for second or third year also.
Okay, you would presume 70,000 a year for the current year. Okay, and therefore one more question from my end therefore would be that a lot of people, at least until 3 months ago, were believing that this whole slowdown in consumption that we're seeing is due to lack of liquidity in the system. Now you're sitting at a place wherein you understand that very well. Do you reckon that if the liquidity issues get resolved, and PSU banks might play a big way, I'm sure Rishi will come to that, do you think that gets resolved?
Yeah, that's what I'm saying.
It will get resolved.
As of now, RBI, immediately after the budget, they announced measures about the liquidity support to NBFCs.
Yes.
So this is, you have to take a very holistic view. It is the banks, within the banks, private sector and public sector. And then there are the NBFCs, which are providing or were providing very efficiently last mile connectivity or lending to those sectors where public sector banks were unable to reach, or were for some reasons unable to deliver those loans. So the entire sector's revival, public sector banks and NBFCs, is very crucial as far as the supply of credit is concerned.
Right. Mr. Kumar, let me first touch on the 70,000 crore figure. Now, what part of this is eventually going to become growth capital? Because it's not like, sure, a lot of the repair work has been done for a number of public sector banks. You mentioned banks coming out of PCA. But obviously, there is still some stress that is coming up. So how much of that, into your mind, will end up actually being growth capital, which is what the system needs, that is banks to lend more? And secondly, on the NBFC side, now you said the RBI is providing some liquidity support. The government's side, they've also announced this credit guarantee scheme, a partial credit guarantee scheme. Just trying to understand, how that would work, because by the looks of the structure, with a 6-month time period, it doesn't look like a lot of the medium or smaller public sector banks can actually go out and make use of that.
No, that is what even we are waiting for the details about this partial credit enhancement, and only when the details come we would know. No. Because this 6 months thing, I am also not clear that does it mean that the loan loss default occurring within the first 6 months, is that the intent, or is it that whatever you do in the first 6 months that will be covered? So let us wait for the details, which will
typically your retail assets won't show that bigger default rate in the first 6 months.
Right. So in any case, when we purchase the pools, normally the default estimates doesn't go beyond 1.5% or 2%. But one thing which has come out very clearly is that the support is available to the sound NBFCs. And through the portfolio purchase, liquidity can go to some of the NBFCs if they are facing a constraint. But otherwise also, like as per our existing policy and Reserve Bank of India framework for purchase of pooled assets, banks can still do it even without the partial credit enhancement, because if we are ensuring that the pool quality is good, which whether guaranteed or not guaranteed, that has to be the case. Right. Because purchasing of a pool where there are doubts about recovery, that in either of the situation, bank should not do and will not do.
Correct.
Originators rating, there can be a little bit of a debate that whether do you do that originator also is AA, AAA, or originator can be when we say sound, so there can be a A-rated NBFC also, which can be.
So how do you define that?
Yeah, that is what I'm saying. So it is ultimately that the pool rating, whether guaranteed or not guaranteed, guarantee is an additional comfort and encouragement. But when we avail or take any credit enhancement also, in terms of the due diligence and the quality of the asset, there cannot be a compromise.
Right.
Originator rating, as I say, that we will have to see what are the guidelines. But I would be open that even if the originator rating is A and the pool rating or the estimates of default given on the pool are within the tolerance limit,
right,
then that should be allowed to be done. But otherwise, even if certain things or pool purchase, it cannot be covered, and it is whatever our existing process and due diligence process is concerned, so that in any case will continue.
Your part of the market, I mean, that is being covered, whatever SBI is buying is SBI is buying. But there is still a gap with respect to the amount of money that the NBFC sector needs and how much the rest of the banking industry is actually buying. Do you think that is likely to change in the coming few months? Because it's been about, 6 odd months since the crisis started. So, to your assessment, what do you feel?
No, whenever there is a little bit of a disruption, because which happened after ILFS crisis, so it takes a little bit of a time for the confidence also to come back. But even today, there is no lack of funds as far as the sound NBFCs are concerned, and anyone who is stressed, so that entity level resolutions will have to happen.
Okay. What about the first part of the question as well, Mr. Kumar? Would you believe that some of this money that will be channeled into PSU banks will be used for growth capital? I'll tell you where I come from. When we speak to people who are talking about how Q1 and Q2, 3, 4 for PSU banks will be like, the hope was that with the right backs, the bottom line will look strong, but loan growth will come back. the slowing economy seems to suggest that maybe the loan growth will not come, and therefore the valuation uptick that people were hoping for, that some of the well-deserved PSU banks might get, will not come in a hurry. How would you picture that?
So it's still like most of the public sector banks, last 1 year has been around the repair part.
Yes.
Right? And it may spill over for another maybe 2 quarters. Right? So the focus has to be on building the balance sheet strength. Right now, immediately we should not jump into a I would say into a trap where again you want to show better profits, better earnings. Focus should remain on what the path the public sector banks, including State Bank of India, has taken. First, we build the balance sheet strength. Profit is bound to follow. Even at the current levels, there can be a good profit which can be generated. And I think that will be the approach that will continue. And demand generally, it picks up in second half. Every year that happens. Even if I look at my book, our say currently YOY credit growth is 13%, right? But if I look at YTD growth, the negative growth is bit higher than what it was last year. So YOY is a good indicator that the credit growth picked up in second half last year very significantly, and same is going to happen this year also.
So you'd reckon that people shouldn't expect too much in the first couple of quarters at least, from the space at large and from SBI too maybe?
No, from anyone,
right.
Like just expecting that there will be a huge earnings jump. So that expectation for any bank for that matter should not be there.
Okay.
But as far as the balance sheet strength is concerned, if you're watching that, then you can definitely expect improvement.
No, the only reason why, again, I'm probing this a bit more is that a lot of PSU bank watchers in the month of September and October, and when we were talking to NBFCs, we were making that point that why is it that NBFCs are so worried about what's happening? Because for the last few years, they were taking the market share away from PSU banks because there were easy rules. Now they're under pressure and PSU banks will come and take away that share. My question is that share being taken up by some of the stronger PSU banks, SBI and some of the others as well? Or is it going, the space that has been vacated, the meat on the table is being taken by the stronger private sector banks? What is your assessment, sir?
We will have to wait a little bit for the numbers for when they come for June quarter. But as far as the retail is concerned, it is about reach, about your capability to deliver. And the banks which have those capabilities, whether in public or private sector bank, they will benefit, because retail is not an easy game.
Sure.
And there, some of the private sector banks, they have an advantage. And a bank like State Bank of India or Bank of Baroda has an advantage. So if you want to do a retail business in a big way, you need the distribution reach and you need a very strong processing capability and a capability to have faster turnaround times. And that depends upon like how much technology adoption has happened in the bank or among the customers. So it is many factors which impact your capability to grow your retail loan book. But definitely SBI has an advantage because of all these enablers, which is the distribution reach, the technology, the processing, centralized processing, liquidity, capital, risk management architecture. So there are so many enablers for the State Bank of India that we will continue to dominate that retail market, which we did last year also. Today SBI is the largest home loan provider, largest car loan provider. On our YONO platform, we are now disbursing almost on an average 25 to 30 crore pre-approved personal loans. Already in last 4 months, we have built a loan book of 5,000 crore.
Just on the app?
Just on the application. So it is a game, or a retail is something where you need to invest a lot of time in upgrading the technology and processes.
Right. Now, there was a lot of talk about the macro situation, but let me come to a little more current and bank specific. There has been an NCLAT judgment in the SR Steel case, which tells financial creditors how they should look at distribution of funds. In situations like this case, the court feels that the operational creditors were not treated fairly. Should courts get into the commercial decision making that a COC, which is built of financial creditors, that COC has taken a certain decision, should courts come in and say that that decision is wrong?
So, this judgment, one is that lenders are not satisfied with this judgment, and definitely either Honorable Supreme Court, they will have a look at it. Many decisions of the Honorable Supreme Court, like Swiss Ribbon case, which laid out a lot of principles in IBC. So this decision seems to be at variance with what was stated in Swiss Ribbon case. So this is something, and again, I am saying this, I had said earlier also, that the law is evolving. There is a complete clarity about the waterfall when an enterprise goes into liquidation.
Correct.
It does not leave any scope for any doubt.
Correct.
The option for the secured creditor to keep outside insolvency process and pursue either under SARFAESI Act or DRT, that option is also available, right? And IBC, during the resolution process, one thing is very clear, that it was never meant to be a recovery process. Unfortunately, it got confused with the recovery process for the secured financial creditors.
Sure.
So that is very clear that it is a resolution process. But the danger is that if in the resolution process there is no incentive for the financial creditor to pursue that course, then it can be counterproductive. Because I have the option of like not accepting any resolution plan.
Correct.
And press for liquidation where I have the superiority.
Yes.
Or I have the option of keeping out the resolution process and enforce my security under either SARFAESI Act or
DRT.
DRT. Now DRT, we know that it takes quite a long time.
Yes.
So if in IBC also it takes a similar time, 3 years to resolve,
Yeah.
and that too I have parity with the operational creditors, then bank as a lender, as a secured creditor, I have to evaluate whether keep out outside IBC or be in IBC or press for liquidation. So these are the calls. But if this law stays in the current form with the judgment, and then either IBC, the law needs to be amended to bring more clarity around the secured financial creditors. The issue is that if in IBC process, the secured lenders, their security is completely taken away and they have no preferential treatment, then this becomes the worst option for the secured creditors.
Absolutely.
Or otherwise, why do I do the secured lending? I can simply have an IOU, right? From the borrower, make it simple, lend them, and unsecured lending does not come at 9%.
Correct.
Unsecured lending comes at 15%, 16%.
On that, yeah.
So I think these are many issues which have come up. But I'm very confident that because the entire process, the law, everything is new. So in the next 2 to 3 months, clarity will emerge on all these issues. But as of now, definitely the NCLAT judgment has put secured financial creditors at a disadvantage in a IBC resolution process.
Sure.
That is very clear. And if suppose at the resolution stage we know that this is going to be the distribution, so lenders may as well decide not to accept it, isn't it?
You think that will happen?
No, that's what I'm saying, that let us not prejudge at this stage. Let us wait what happens in the Supreme Court or what happens at IBC also. We have seen so many amendments time to time. And another thing which I think this is high time, that this limitation of 270 days, if it doesn't get resolved, let it go to liquidation. Just keeping it stashed for
Extending it, yes.
extending for 2 years, 3 years, I don't think that
That was my question also.
that IBC, that was not the intent, and of course the difference is that these were all legacy cases, and in legacy cases it has its own problem. IBC, anywhere, it's a quick resolution mechanism. where the creditors, all category of creditors, they sit, and in US they vote also differently. Even if you look at Section 230 of the Companies Act, it recognizes different class of creditors. So you need approval of 75% of shareholders. You need 75% approval from secured financial creditors. You need 75% consent from the operational creditors. So it is not that the law does not recognize a different class of creditors. But within IBC, because of course there is no waterfall mechanism defined in the IBC process, and rightfully so, because it is a resolution.
Correct.
Resolution can happen when everybody who is a creditor has to be satisfied. But that does not mean that the secured financial creditor and the operational creditor who are essentially not equal becomes equal. So that is our primary response or reaction. But ultimately, as I said, that once the matter is heard in the Supreme Court and whatever is the final outcome, or whether we will be representing even for maybe amendment in the law to bring some clarity.
You would approach the government?
We will, because otherwise the whole intent and the intent around a efficient resolution mechanism. So if it gets defeated, so it will be not good, because after a long fought battle, in fact, the law came in.
Correct.
So it is very important from, as a lenders, as a secured financial creditors, that the advantage or the new paradigm shift which this law brought, so there should not be done anything where it becomes a backward move or backward step. But these are important issues, and I'm sure they will be addressed.
Sorry, I'm just going to stretch that 270-day bit point that you made earlier. If it doesn't get resolved within that period, just go for liquidation. The law in its text says that very clearly, but often the interpretation is it's not mandatory, it's just sort of directionary. My question also is that when these delays happen, like for example in SRC, now there is a bidder who has been waiting since October last year. Obviously, there is a time value for the
bidder also.
Yeah, for the money that they brought in. They must have brought it in with a certain investment horizon. There are also bank deals with some of these foreign funds who have bought the loans. All of these different stakeholders who may not directly be involved between the lender and the borrower, but they're also getting impacted, right? So to your mind, do you think that could impact, say, bidder interest or foreign fund interest?
I think at least this is my view, that this 270 days should become mandatory for resolution to happen. Otherwise, it should be taken out of that process and it should go into liquidation. If we leave it discretionary, then we will continue to have these situations where the matter goes on and on and on, and the very purpose of the quick resolution which was enabled. And I'm again re-emphasizing, IBC is not about recovery. That secured lenders also have to understand. This Dr. Sahu is the chairman of IBBI, and I have myself clarified on several forums that lenders' mindset also, even media's mindset. You always ask us how much you have recovered. It is not recovery. It is protect the corporate debtor.
Right.
Because why it is important to protect the corporate debtor is because the employment, there are so many people who are dependent on the corporate debtor. So one distinction which IBC definitely brings in is that corporate debtor, everybody should try to protect, keep away promoters. The law is not about promoters. The law is all about the entity. But if it takes 3 years to resolve, then we are in DRT mode.
And that's not desirable. Sure. A couple of other things. One of the newspaper reports today suggested that a probe, I'm not asking you to comment on that specific case, but I'm asking, if you can comment, great. But one of the newspaper reports today suggested there was a large hole found in one of the accounts, which was a panel initiated by SBI. My question to you is, everybody is very happy with the fact that the PCR for a lot of well-managed banks has moved up, a lot of provisioning has been done, and now there are these accidents that are coming up. PNB on Saturday revealed a very large amount as well. How How
So
sure
one
can the
is that,
street be?
it does not impact the PCR. Let us understand very
I
clearly.
agree. No, my question
because
was-
most of the these accounts which we are talking about, they already have been classified as non-performing loans, and many of them are either D2 or D3.
Sure.
So, say for example, the case you're talking about PNB. So I did 100% provision last year, so it doesn't matter.
Yeah.
Right? And as far as you're talking about the holes, so we are finding it everywhere. And that is the whole effort is about, that at least going forward, let us clean up the system. We are going through that pain. And
long do you think, sir,
I
that-
hope that in future we will have a road which is much smoother and not full of potholes and holes.
How long do you think, sir, this could take? Not just for State Bank of India, but the space at large. How long do you think this discovery process could take? Because they're coming up.
That is like,
would appreciate
I think
that.
quite a few, like lot of, as I said, that on this path, we have found a lot of holes and potholes. It is like any other road in any city, if that was the
You can quote
logical
Mumbai, it's
use.
okay. We all live in
I
here.
don't want to mention a particular city or any particular, but ultimately we need to have a clean and a smooth road, right? And everybody is learning the lessons. And when such a huge shift happens, for last so many years you are accustomed to doing a business a certain way, and then suddenly you find that what was being done, even at, let me put it the other way, the banking is all about trust. But what it has brought out very clearly, whatever has happened, that that trust, now it is all about verification and verification.
Sure.
So you can't trust, but that's not a good thing.
Yeah.
But ultimately, if it happens that as a result of this massive cleanup, which is happening, and all the holes and potholes are appearing, but if there are learnings at bank level, lenders level, we are learning it a very hard way. We know it. The corporates also, they have to mend their ways, and the entire ecosystem around the auditors or this thing. Even when we lend money, we rely on certain things. So what is your financial statements, your audited statement? Now, if the people who are supposed to do their duty, they have not done, and the corporate governance standards later on you are find they are poor. So the entire ecosystem was such that I think that has been exposed, and exposed for the good. So my belief is that once we are through this painful process which we are going through, the things will be much better.
But it'll last a couple of quarters more, maybe? You would reckon?
No, quarter is not about quarter. In terms of, if you ask me for the recognition part, recognition, there are no issues. Whatever comes, it will be your normal.
Normal. Okay, fair call.
There is no accumulation.
Okay.
Accumulation was at the AQR level.
Sure.
So what you found in March 18,
Right.
most of the banks who were in corporate lending, there was a huge surge in NPA. The State Bank itself, we declared an NPA of 1 lakh crore. This year, March 19, I declared 32,000 crore.
Sure.
So just see this
Fall.
thing.
Drop.
Yeah.
So 32 will become 5,000 crore? No. Right? So there is a certain percentage of your portfolio where you have to have your tolerance limit.
Okay.
So for State Bank of India, say for example, I have a loan book of 23 lakh crore. In that, if it is ideally, if you ask me, it should not exceed 1%. But again, we are part of the macroeconomic system. Whatever we need to do to improve our internal processes, we have done a lot of changes in that process, make it more risk oriented, better assessment, better monitoring. But that is still a work in progress. At the same time, if the ecosystem or larger macroeconomic environment doesn't support, then what do you do? So the improvement in the macroeconomic environment and the ecosystem also, that improvement is also needed. And given the environment in which we are, so if I am able to manage my fresh accretion of NPA within the range of 1.5 to 1.6%, so to begin with, I think that will be a benchmark which we will aim. But ultimately, the long term, it has to be around not more than 1%.
Okay.
But it's not so easy to achieve in the current environment.
Okay. One last question from mine, something that the markets would know, and I'm guessing you will be asked once you come out with your results as well. You've mentioned that you don't need any capital from the government, that you've been on record. For the fundraising, you reckon it'll be front-ended or back-ended when it comes to FY20, the QIP?
So right now, as I said, that there are many things on the table. So we will take a call at the appropriate time. There is neither any plan that I have to front-end it or back-end it or this thing as we move ahead. And particularly, I think I would like to wait for September quarter, because this current quarter, September quarter, there are a lot of things which may happen in terms of recoveries, in terms of certain other plans which we have. So we are in no hurry. No. Let me put it this way. But at the opportune time, we are not averse that whatever our plan is about, we have an enabling resolution of 20,000 crore. But I don't think we intend to go and raise that much amount of capital. But we will assess the situation, and that is a dynamic situation, of course, and then take a call. Because if I take the capital, I should have the opportunity to deploy it also. Because if I take the capital and the growth does not happen, then how do I service that capital? That is also an issue.
Just one last question from my end, and we've spoken a lot about stress. Let me talk a little bit about growth. Now, earlier, I remember whenever we reporters used to come to you, we would say which are the sectors that you are keeping away from completely and which are the sectors you want to focus. But now, after the recent HFC problems that have come up, especially Divan housing, doesn't look like there is a sector that is left that is untouched or is not prone to some problems. As far as SBI goes, FY20, FY21, for you, what is going to be the path for growth? Where are you seeing those lending opportunities? Because that is going to be key when you're actually on the growth path.
One is that affordable housing, I see a lot of efforts. And when affordable housing means not only housing loan side, but somebody will have to construct those homes. So we revamped our EPC policy in a big way, right? Road sector, last year, we were, say, for example, for some time, keeping away from HAM projects. But we revamped the policy, and I'm happy that the concessionaires, they accepted that policy. So one is that we have tightened our policies in most of the industries. And the approach of the bank as of now is that the way we operate is, one is our retail. Retail includes agriculture and SME to corporate. That portfolio level, 57, 58 to 42%. That ratio is not going to undergo any significant change. So retail story, it will continue as it is. Where it is focused on housing sector, it is focused on agriculture, it is focused on SME. So that mix will not undergo a change. Within the corporate, as I said, that policies are there. They have been a bit tightened. More and more, how do you capture the cash flows and flow-based lending you do. Based within that, I still see that if the budget has talked about $1.5 trillion of investment, 100 lakh crore in infrastructure, that itself will give huge opportunity for the bank like State Bank of India, which at least as compared to many other banks has good capabilities and experience in financing the projects. And so road sector still, I believe there will be action. Renewable energy, I still believe there will be a lot of action. And oil and gas sector, because of the city gas projects, the refinery which is coming in Rajasthan. So if I look at the project finance pipeline in the bank, so these three sectors we are seeing the demand.
Roads, oil and gas,
and renewable. These three are the major sectors. Other than these, any big projects in manufacturing or those kind of things, that demand I'm not seeing in my project finance pipeline. Rest will be all driven by whatever are the working capital requirements and this thing. But I think there is a need to revive the EPC sector. It got very badly hit in the last cycle. But not many good EPC companies are left as of now.
That is the problem.
So only L&T and Shapurji Palanji cannot build the whole infrastructure in the country. But again, I am saying that with certain safeguards, and bank is open to business for sure. And only thing is that more discipline is required as far as lending and borrowing is concerned.
Well, nice mix of processes and outlook, Mr. Kumar. Take a moment to thank you for joining in today and speaking to us at
Thank you.
Quint.
Thank you so much.
Thank you.